Right. Good morning, traders. Um, Looking at the calendar, we have retail sales coming up in 25 minutes, and that is about retail sales is the red news, initial jobless claims. So we've got a data dump coming up in 25 minutes. Once that's out the way, uh, I'm free to go for looking for trade setups. I trade from 10 a.m. onwards. I let the Wall Street Open play out and let the dust settle. And 10 a.m. between 10 and 12 10 a.m., 12 p.m. New York. I'm looking for direction in the market, a trade within a trend with momentum. The question I've been asked so far is about gold and silver. So, with using the TrendPredator Pro, we get the table and the context and potential setup trading opportunity. And at a glance, I can look at all my preferred markets and weed out markets that are conflicting. So it's showing that the dollar is conflicting at the moment, DXY. Not that I trade that as an index or an instrument, but it gives me a feel for what the dollar is doing, and therefore I can apply that across other markets as well. So, for instance, if gold is conflicting, then it may mean that if I'm looking at gold, then it might also be conflicting. Or I might have a trade setup that's dubious due to the dollar being conflicting. But I don't want to get too technical and complicated. I've been asked specifically about gold and silver, so let's look at those. So looking at gold, we can see that we are in an uptrend on the monthly, the weekly, and daily chart. The monthly chart had a scenario where the price dropped, let's say in the month of October, put in a low, ranged, and then November dropped below the October low, but moved back above it. So there's the October low. It was resistance, but then November moved above it. Okay, and therefore that's bullish. So this month, January, is inside of December's month so far, but we've got bullish momentum from previous months. PRV stands for previous. So the previous months are bullish, and therefore that creates, even though we're inside of December's range, it's bullish. Okay, because we're back above the previous lows of a given month. On the weekly chart, we've got a scenario where we've been 3L. We've been breaking up. So let's say 1 week was like this, and then we broke the highs of that week, and then we broke the highs of that week, and then we broke further highs. So when a market's doing that, making continuous highs over and over and over again, at some point that will become overextended. What goes up must come down, and vice versa. So while the weekly and monthly chart is bullish, just be a bit cautious that we're not overextended. We're starting to potentially decelerate in that monthly and weekly bullish trend. Having said that, on the daily chart, we're still making fresh highs. So that was yesterday's high. Today, what we've done is we've broken yesterday's high. We're on the other side of yesterday's high. So the daily chart is saying, well, although the weekly chart is somewhat overextended, we're still making fresh highs. So don't bet on a reversal just yet. So there still could be prospects of a upside continuation. So let's look at the chart now that we've understood the table and the context is still an uptrend. The indicator is telling us that we can still look to trade with the trend. It's a 3-star opportunity to be going long today. So let's have a look at that. So, as I said, we've broken yesterday's high. So we're on the other side of that high and we're pushing up. We've got last month's level, last month's highs as a target. And because we're above last week's high that was made last Friday, we're still above that level and above yesterday's high. We assume that we keep going up, that we stay above those levels. Now, that's not to say that we can't come back inside of last week's high and yesterday's high. And if we do, our indicator will tell us to stop looking for the long, and instead this will flip bearish and it will tell us to be selling, because we'll have a fake out high on the daily chart. That will be red, just like the 4-hour. And we'll have a fake out high on the weekly chart as well. So we'll have a confluence, and it will also, well, depending what time of day, but this could also turn red as a fake out high. If we were to break the Asian highs, for instance, all of that would be red, and therefore it would be a sell opportunity. So this indicator will update in live time. Let's look at the actual template that I use for that indicator. And we'll take a deeper dive. So as we can see, the market on the day rallied. So if you had been trading fairly late in the day, London, the indicator would have given you a breakout signal to have gone long. But it would have done so showing you 3L on the weekly chart. So that would indicate that you might not want to hold on for the whole day, because there could be sellers emerging. And that's exactly what we've seen. Okay, so if you are happy with a 2-for-1 or a 3-to-1, depending on where you put your stop loss. So if you've gone, let me see. If you've taken the long from within London over here, you would have got your 3-to-1 relatively quickly. Stop below the low, let's say. Okay, you would have had to hold on a little bit over here. So 4:15-ish. So over a couple of hours. Okay. Anyway, nonetheless, what are we seeing now? So we are seeing a market that's pulling back. It's taken out the London Open 4-hour high. That's bearish. Now, if the market gets below the Asian high, then that's giving you the indicator, which relies on 8-hour highs and lows, will give you an opportunity or a trade signal to go short. And that's counter trend. And it's risky because you're still above the breakout of yesterday's highs. However, if we get below yesterday's highs, we'll also be below the previous week's highs, and that will be uber dovish, bearish for a sell-off. So at the moment we're bullish, but below last week's highs and yesterday's highs, we are bearish. Okay, so now let's have a look at silver. Silver, the indicator is telling us that we have a reversal continuation into a downtrend. Why do we have that? Well, we've got a fake out high on the weekly and a fake out high on the daily. We have the conditions we were talking about in gold to some extent. We're still bullish on the 4 and 8 hour charts. So let's have a look at this. As you can see, we took out yesterday's high and last week's high. So that, while below that level, is bearish. Let's have a look on the TrendPredator template, and we'll have a look on a candlestick chart. So the indicator is giving us a mixed bias because we're still bullish on the monthly chart, even though we're bearish on the weekly and daily. Currently, the 8 hour and 4 hour chart is also bearish. So it's giving us a reversal continuation turning into a downtrend due to a fake out high of yesterday's level, fake out high for a low hanging fruit trade, LHF, opportunity to the downside. What does that mean? Essentially a stop hunt into the long squeeze. Low hanging fruit. There are stops below the New York lows, and that will come of those that were buying that market yesterday. Sorry, this is the US 30. I don't know why it's done that. Bear with me. Sorry. I definitely clicked this. For some reason, it switched to the US 30. And it did that on gold as well. I don't know why. Right. That's better. Right. Let's open up this chart and see that it stays as silver. Yes. Okay, good. Okay. So I apologize about that. I don't know what happened. Right. Silver. Start again. Silver is a fake out high on the daily chart. So fake out high on the daily chart. That's bearish. So what the indicator is telling us is it's telling us that it's reversing. It's reversing the bullish trend because it's broken yesterday's high. So this is preparing us for a potential reversal trade on the day. But it's not going to give us a setup until we have an alignment of the daily and weekly chart. The weekly level, therefore, is critical. And where is that? Well, if we look at the high from last week, Friday, there it is. So that green line on the indicator where it says weekly breakout needs to turn red, and it needs to say WFOH, like it's saying on the daily chart. Then we've got a confluence between the daily and the weekly chart. Both will say FOH, and it will say that in the table down below. And that there is setting us up for a reversal trade. So as you can see, the price has dropped below that level, but it's come back up above it in recent trades. So it's flipped from FOH back to BO. What you want to see is the price action bearish below that level to give you the confidence of a high probability that the market is going to sell off in line with the bearish momentum that's coming in from the sell-off from above yesterday's and last week's highs. While we're below yesterday's highs, we can't be looking for a long. If we get back above yesterday's highs, we can start looking for a long again, because we'll be back to bullish, because we're both above the daily and weekly breakout levels, and everything will be back green. But for whatever reason, the market is dumped, taking out the highs. It could just be a stop hunt. That could be the low of the day. We don't know. So we sit on our hands and we wait for the market to set up, and we can use this indicator to tell us what is setting up and the quality of the setup as and when an opportunity turns up. So I hope that was insightful. Any questions, reach out, and good luck with your trading. We've got 9 minutes until the data dump. We've got the Wall Street Open at 9:30. I advocate letting all of that play out and then let the market show you its hand when the dust has settled, volume is in the market, traders are trading, and there is momentum with direction. For me, I prefer to wait until 10 a.m. New York to look for such conditions.